Hey guys, welcome back. So in this video, I want to talk about a subject that I think is really important. And it's something that once I got a grip of, I made leaps and bounds in my trading. It took me a long time to kind of grasp this thing. I was struggling for years and years. And then when I really got a grip of what I'm going to talk about now, it really helped me just motorize myself forward. And this is developing patience and knowing when to trade. And the reason I've got my laptop here at the moment is because I've done a talk on this topic before, and rather than just giving you the slides, I'm going to kind of use the whiteboard. I'm going to go back and forth to the laptop. So if you see me looking off screen, that's exactly what I'm doing. But I think it's going to be better for you to see, this written on the whiteboard than it is to look at kind of dull slides. So number one thing is developing patience and knowing when to trade, because it's too easy to just think that the more you trade, the more money you're going to make, right? That is the easy trap to fall into, but it's not the case at all. You need to really understand that there's a specific time in the market where you have your edge. Yeah. Now I'm moving ahead slightly from somebody who is a real beginner in the market. I'm moving towards now somebody who is a little bit more seasoned, understands, what they're good at, what they're bad at, and all those kind of things. But the main thing, if I can find my red pen, I might just go with the green here, is when I said this to myself, this was when the doors kind of opened up for me. You can't really see that green. I'll stick with the black. I trade when I have an edge, right? So what do I mean by that? I mean that I do not get involved with the market, with any trade, unless I have an edge. Now, an edge to me at that point in time when I was writing this, and an edge to you, should be when you have a good chance, a high probability of making money. Whether that is a high expectancy from the trade, or whether that is a good risk-reward ratio and perhaps a 50-50 neutral expectancy. We talked about that before in other videos. But it's knowing that you have a good edge, a good chance of making money. Whether that is something like, for me, it was one of my favorite setups. Again, we've shared this kind of thing, was buying a pullback on an explosive opening driver as when I was very aggressively day trading the DAX at the time. That was something that was very lucrative for me, and just knowing that I would only trade when I saw that, or I saw my library of setups that I was employing for that day, as opposed to trying to get involved here or here or here or further in a day or here or here or here. Just literally drilling it down and saying to myself, listen, I am only going to get involved. I'm only going to put my capital, my risk capital at risk, if you like, when I see the edge. The edge has got to be there. What is my edge? That's for another video. That's for another topic. Defining it yourself. You can define your own edge, your own kind of way of looking at things, but only getting involved when you have your edge. If we look at some of the biggest hedge fund guys and traders that you perhaps admire or have heard of, they have a specific strategy. Even going to someone like an investor like Buffett, he doesn't get involved in stuff that he doesn't understand. He doesn't get involved in chasing things because they're at new highs, even though he may have missed loads of money by doing that. Does he care? No. He focuses on buying things that he perceives are undervalued. Now, I know that's different from a trading perspective. We're not necessarily going to be doing that. We're going to have more, some of us might have more technical decision making that comes into the process, whatever. But the point is, he's got an edge, he's got a strategy. I know a guy who specifically would just trade one market. In fact, I know many traders who do that. Just trade one market and then look for a specific thing in that market, the high or the low of that market. And talking about high or low, right? Paul Tudor Jones, great example this is. This guy would say, hey, and I'm sure he's changed his strategy now, but if you go back and look at the interview he did sort of 20 years ago, he's basically said, listen, I'm very good at catching highs and lows in the market. Very, very good. Now, how many times you read in the textbooks, oh, don't try and pick a top, don't try and pick a bottom. He basically said, enough of that. I'm good at picking highs and lows. I've got proof. I've made money at it. So I am going to continue on do that. And he said, the meat in the middle, I'll let someone else get involved in that. And the textbooks were all saying, get the high probability meat in the middle. For him, that was his edge. So he only got involved when he perceived something wasn't an extreme. And of course, we know this guy's made several billions doing that kind of thing. Hedge funds, again, they have got a specific strategy. They know what they're going to do. Perhaps they're investing in miners only because they understand the flow of resources or whatever it may be, and they've got a good handle on that, whatever the situation is. But even the biggest guys in the world know what their edge is and they stick to it. And actually often when you look at some of the failures of big funds, it's because they haven't really got the returns that they've wanted from that, and instead of being patient and just riding it out, they've looked elsewhere, got involved with things that perhaps they shouldn't have, and blown up. And that's the same with individual traders as well, guys. Unfortunately, I know people who have done exactly that. Rather than stepping back and saying, you know what, I'm very good at this. I'm very good at this specific basket of strategies or this specific style of trading. The market is not really offering me the right options now, or the right scenarios, the right conditions to take those trades. I'm going to start to become this type of trader. And the danger is then that they're going out of their edge. Now, it's a difference from stretching your comfort zone and becoming a different trader. That's a different topic altogether. But they're doing something where they don't have the edge. They don't have an edge personally, from a strategy perspective, from a personal perspective, whatever it may be. And that then can lead to you just becoming one of the statistics. Because, just moving on back to this point before we move on, is that the key to trading is not necessarily how much you make, it's how much you can keep. It's reasonably easy to make a decent amount of money trading. And I say that with caution, by the way. Nothing's easy, but it's easier to do that than it is to keep it and say to yourself, I've made a decent amount of money here. Now, how do I grow that while still protecting that? That is the difference between somebody who may make big swings and go back down again, big swings and go back down again. It's knowing what your speciality is, what your trading edge is, and only getting involved when the conditions are right, whether that is intraday, whether that is on a week basis, a month basis, a year basis, whatever it is, knowing your strengths and only getting involved then. Right, let's look at, in the next video, I'm going to talk a little bit more about this topic.